I believe that we are heading into a very, very severe recession. There will be the normal deflationary bust, as we also saw it in 2008, and it will be a more prolonged recession where we're going to see also a stagflationary development over some time. Feeling this bad is actually just a sign, an indication of what's to come and how bad it can be felt. I've been calling it the worst thing we have seen since 1929. I think we'll be looking at a situation where, like in 2007, the recession started out in December 2007. Nobody really understood that. And Bernanke was out and saying, oh, we will be ready if anything happens. That was in February of 2008. We were like 3 months into it, and he was like, I'm ready. And then they were already way too late. And I think that's what we're going to see again. They say they'll be, oh, we are so ready for this when it happens. But they are actually right now generating or setting us up for that big crash.
14 years instead of most bubbles, 5 to 6. It's been stretched higher, longer. So you'd have to expect a bigger crash than we got in 2008 to 9 when the baby boom wore off, in 2000 to 2002 when the first tech bubble, which is more similar, this is really the second tech bubble version, crashed, and the NASDAQ went down 78%. I think the Dow, the S&P went down something like 58%, okay? So that's where we're at. This thing has got to blow. It's showing signs of topping here. It's having hard time, just barely making new highs, but we've got to see a crash of about 40% to say, oh, okay, finally the bubble's let off its steam. And once it gets that much momentum, I think it's hard to stop, and then we'll go from there. I'm just telling people, this is not the time to hold out for a little more gains. We've already gotten the longest bubble, the greatest gift. Everybody's house has gone up double or more what it should be worth. Everybody's stock portfolio has gone up double or triple what it should be worth because of all this stimulus. But if you have to pay the piper, which I say and history shows after bubbles, every major bubble is burst. And bubbles are not followed by recessions, they're followed by depressions. When you hear Great Depression or the Long Depression of 1873 to 96, those followed major bubbles. And the other one was the Great Depression of 1836 to 42. That followed a major bubble back then. So bubbles don't end well. And this is the largest and longest bubble. And
if you've been in the market for a new house recently, you know prices have been, to borrow a technical real estate term, insane. More precisely, home prices have jumped nearly 20% since this time last year. The Federal Reserve Bank of Dallas warned this week of what it called a brewing U.S. housing bubble, with trends reminiscent of those that culminated in the historic financial crisis of 2008.
Quarters of Silicon Valley Bank in Santa Clara, California today.
They just came out and told us that the bank is shut down.
SVB, the 16th largest bank in the U.S. with $175 billion in deposits, is now the biggest American bank to fail since the 2000s.
A preliminary investigation into a mysterious pneumonia outbreak in Wuhan, China has identified a previously unknown coronavirus.
When the pandemic hit, it was so unlike anything any of us have experienced in our lifetimes.
Already, 45 cases have been reported in China, including 2 deaths. The victims are thought to have contracted the virus in a meat and seafood market.
We'd been paying attention to what was happening in China for a few months.
There are new images out of Wuhan that purport to show the dire conditions in hospital.
I was calling my contacts, global businesses that have big operations in China, to understand what their employees and staffs were seeing. And we were all trying to learn as much as we can about pandemics and what it's likely going to mean.
Major sell-off across Europe this morning.
I think we all figured out very quickly the pandemic and the virus would drive the economy.
Investors are spooked by the growing number of infections outside China.
But how fast would it hit us? How widespread? What would the healthcare response be? It was maximum uncertainty. And you were seeing that uncertainty manifest in financial markets.
What you have here are concerns, fears, worries, and deep uncertainties about what's likely to happen next.
People were scared. Investors were scared. Individuals were scared. And they said, you know what? I just want cash.
Markets giving us the worst two-day point drop ever in history.
I don't even want treasury bonds. I don't even want corporate bonds. I don't want stocks. I just want cash. And when everybody in the economy says, I want cash at the same time, that leads to potentially a collapse of financial markets.
Yeah, means the first circuit breaker for whom the bell tolls has been triggered.
I knew we were going to wall.
All the weaknesses of the system that had built up over the years of easy money were being exposed.
Market functioning was starting to cascade into failure.
The Dow plunging again today. The 11-year bull market has ended.
2008 financial crisis.
Started breaking new records.
I see quite a bit of green on the markets this morning. Dow, S&P, NASDAQ, all of them higher.
Over the next 2 years, tech stocks would soar.
Apple is now the first publicly listed U.S. company to be valued at $2 trillion.
Tesla shares are soaring. This company has just gone through the roof this year. The stock price has more than quadrupled.
Right now, it's a seller's market, and homes are selling fast.
The price of real estate would shoot up across the country.
The housing market has never been hotter.
And corporate America would take on even more debt, which investors gobbled up.
Massive issuance of corporate debt.
More than $10.5 trillion.
For the richest Americans, it was an extraordinary time.